Hi, I'm Pete May, president of GreenBiz Group, and I'm excited this morning to be here with Rahul Ghosh, managing director, ESG outreach and research with Moody's ESG Solutions. Rahul, great to have you here this morning.
Great to be
Or,
here. Thanks, Pete.
or I should say this. You're in London, so I guess evening or late afternoon for you. I thought to start out, Moody's is certainly a well-known brand to everybody, but I'm not sure everyone, all of our readers will know the full scope of what Moody's does. If you could tell us a little bit about that and about your role, how you landed at Moody's ESG Group.
Absolutely. Thanks very much. Well, I sit within Moody's ESG Solutions Group. It's a relatively new business unit here at Moody's Corporation, and we've really been set up to help serve this growing global demand that we're seeing for ESG and climate data, analytics, and insights. So we work very closely with Moody's affiliates, 427 and VE, and we provide a range of services from ESG scores and sustainable finance certifications through to deep climate modeling on the other hand. In terms of myself, I lead a team that helps craft our ESG thought leadership, helps engage with the market and leads our outreach. My background is in country risk and sovereign risk, particularly in emerging markets. And there's a lot of parallels to what we're seeing on the ESG space. And of course, with increasing regulation, investor dynamism, and changing consumer preferences, I think it's a really exciting and pivotal time for both my team and for the industry at large.
Yeah, I'd say it's an exciting time. It's also a confusing time. There's so many this plethora of standards, frameworks. We're seeing that there's this constant kind of holy grail for getting to harmonization among these among standards. Tell us about your view on that and how optimistic you are to achieve success in that area for both the investors and for the companies, the corporations as well.
Yeah, absolutely. As you mentioned, Peter, there's this sort of complex mosaic that we see of various reporting standards and frameworks, but we're relatively optimistic that we're going to see a move towards something more harmonized starting this year. It's going to take time, but the stars are starting to align. If we look at some of the leading global standard setters, many of them are now working collaboratively and are looking to really build a comprehensive and cohesive reporting architecture. I think one of the key areas to watch this year is going to be around the evolving definition of materiality, both in the context of risk and financial risk, but also impact and external impact on the environment and society. This is the so-called double materiality principle. So certainly something to keep an eye on in terms of that harmonization story this year.
Yeah. And it's also a really interesting time on obviously a big part of Moody's business is on the debt side. And I know for sustainability professionals, it's been really exciting to see them start to work with their finance groups on sustainable debt and about how attractive sustainably linked bonds have become in the last year. Tell us a little bit about what you're seeing in that space.
Yeah, well, I think first and foremost, sustainable investing really has unquestionably emerged stronger from the height of the pandemic. If we think just 12 months ago, amid all of the financial volatility we saw, there were question marks around whether there'd be durability in terms of issuance. And last year we saw green, social, and sustainability bonds top $600 billion globally. And there are a few signs that things are slowing down, Peter. And I think one of the big stories is the rise to prominence of sustainability-linked bonds. They're more flexible. They offer a more dynamic vision of what it means to be sustainable, the use of key performance indicators, for instance. I think given their flexibility, sustainability-linked bonds are going to be appealing to a broader church of sectors and issuers, and are hence expected to play a big role in the transition. Investors will like them too, given that flexibility. But regardless of the structures that we're seeing, it's important that targets, commitments are credible, they're transparent, and they're in line with a company's broader sustainability journey.
Yeah, interesting. So last question for you. We at GreenBiz are seeing this enormous transition to a low carbon economy, all kinds of drivers around that, government, individuals, corporations. And I'm curious, somebody coming from the financial sector, how optimistic are you that financial markets can really play an active and a positive role in enabling real change in that regard.
Well, we shouldn't downplay the importance of what's at stake. So, if I think about data from Moody's affiliate 427, they estimate that 40% of the world's population and GDP will be exposed to damaging floods by 2040. So, that really does underscore the importance. But there is scope for muted optimism in the role that finance can play. Firstly, we're seeing governments come together collectively and really start to hard code decarbonisation into their COVID recovery and employment plans. The greening of central banking, that's another important trend that we're seeing. And really a growing consensus that climate change represents a risk to both price stability and financial stability. And finally, let's not forget the huge investment opportunities for asset owners and asset managers as well, underwriting the transition to a sustainable economic and financial future, notably across the emerging markets. So in short, I think finance clearly does have a role to play, and Moody's will continue to develop domain expertise and solutions to really help the market on this journey of greening the financial system.
Well said, and I think it's such an exciting time for ESG. It's amazing for you to be in such a large organization that has the power of Moody's and a new group really focusing on ESG. You're in a really exciting role, and I'm eager to see what will be coming from your group in the next year. So, Rahul, Ghosh from Moody's, thank you so much for joining us this morning on GreenBiz Studio.
Thank you.